Welcome to another chart of the day video by the Trader Guy at thetraderguy.com. And as you can see, I have the Pound Aussie weekly chart, and I have three lines in it. Some of you out there may have heard me talk about something called box trading or consolidation trading, and this is a prime example of it. Typically, what you'll have when you get, especially a longer term consolidation, you see we're sliding down here, and this is the weekly chart, but we're sliding down here over a certain amount of time. End of October 2010, we really started to accelerate to the downside, get a little bit of a pop, and came back down to find the 1.47 level eventually. As you can see, this area here, which was 1.63, which was so resisted before, has been resistive since then. And looking at this, you could begin to say, okay, well, we've got these two levels here, and it looks like we're consolidating, and it's close enough for me. I would certainly say we've been consolidating over the last, say, at least year, starting here, and possibly going back a little farther. It was implied here. Really, it didn't get done until maybe June of 11, and I'm currently making this September of 12. So you can see about a year and a half or so. I would think pretty much everybody thinks that we're in consolidation. Well, one thing that you'll find on these larger charts, and I don't know if I've heard other people talk about this, but in my box trading thoughts, and quite frankly, I just couldn't come up with a better name for it. It seems like we're in a rectangle, we go up to the next box and etc. When we consolidate like this, a lot of times, if you take the top and the bottom, take the difference and divide by 2, in other words, find the exact middle, a lot of times you will see the exact middle during this time period really does have an effect on the markets. It gets sliced through over time, don't get me wrong, it's not as important as these two, but it's an equilibrium. There are people who believe that 163 in this particular pair is far too expensive, and there are enough people that believe that 147 is far too cheap. So somewhere in the middle they have to meet, where things are quote unquote in the equilibrium, and that's essentially what this 1.55 level is. So having said that, that sets up what we've been looking at. Now, one thing that I've noticed is quite often before a breakdown, and this would be a continuation of the overall trend if we broke down, you will see a failure at the midpoint, and that's what I find interesting at this chart right now. We have a shooting star right at the midpoint. I call this the center line, the midline, the midpoint. It's all the same thing. You've got the two outer edges. A lot of times we'll bounce and just won't quite make it at one particular move and then start to fall again. Well, that shows weakness, because while we've been able to slice through it and then bounce, all of a sudden we can't, and a lot of times that means a breakdown. Now, that's not necessarily what I'm calling for. I'm just showing you what I see a serious potential of in the future. Another thing to notice is that we've been rising in price, but you'll notice how the MACD, the histogram, one way to look at it is strength of the move, is slowing down, and it's getting thinner and thinner in this consolidation, and you would expect that. So it does show a slowing of momentum. What's interesting though is we've had this sharp spike, and although it's risen, it hasn't risen as much. Is this an indicator that you can make a trade off of? Of course not, but it does show that we really are starting to wind down as we tighten up. Other things of note is the fact that we can draw Fibonacci, and I like drawing Fibonacci's on every potential trade, not because I'm a Fibonacci trader, but a lot of people are. And what you'll notice right away on this particular setup is the shooting star, which in and of itself is a bearish candle, stopped right at the 61.8 and seems to be clustered right around the 50%, which is basically 155, the center of this box, this rectangle. The only reason that the 50% isn't exactly lined up with it is because you will notice the last time we tried to hit that resistance area, we didn't quite make it, which in and of itself is a little bit of a negative sign as well. So now that we have the weekly charts, and we've done all this analysis, obviously the trend's down even though we've gone sideways for quite some time, you can do things like add a moving average. 104 is 2 years. And when I put that on the chart, you can see that we are approaching that. Just to show you some difference, let's go ahead and put a year on. And you can see here we are just about at the year average. Now it would make sense that we are basically flat. We're still trending down slightly. We're basically flat because the last year has been back and forth. So while we are above the 52, what I find interesting at this point in time is that if we do manage to fall and break the bottom of the shooting star, which is a classic sell signal, we now have a completed failure at the 61.8. We have a break of the year average, 1 year average, and then of course a break of the shooting star itself, all at an area that we have seen price react to over and over. Granted, again, like I said, it's been sliced through, but it has caused a reaction every time. So in conclusion, when you look at this, if we fail here, that's a pretty bearish signal. And then it really comes down to whether or not we can get below 147. My experience has been when this happens, if you see any kind of acceleration to the downside, more often than not, that bottom level will give way and we will continue. Whether or not we do isn't necessarily the point of this video. The point of this video is how you can look at charts and try to put several things together at one time in order to come up with some type of rational trading plan. Now, before I let you go, one last thing, the fundamental side. This happens to be after the September 7th non-farm payrolls number. And that number was very poor in the United States, suggesting that the Fed would go into quantitative easing. What happens when we go into quantitative easing? Well, the dollar loses value, and specifically the commodity currencies tend to gain. That would be the Australia part of this pair, which would make sense that the Aussie would strengthen against the pound. It's not a anti-pound play, it's a pro-Aussie one. Two different things, small yet key distinction there. So having said this, this looks like a fairly bearish chart, and I thought I would bring it up to you because there's a lot of little different things in it. I will continue to bring these videos out and show you how I see charts. Kind of gives you a hands-on look as someone who's maybe has a little bit more experience trading the markets than you do, how they'll look at the charts, try to make them simple, and move on, place their trades. If you have any questions, feel free to email me at chris@thetraderguy.com, and I will respond as quickly as possible. Also, don't forget to come to thetraderguy.com as we have free videos, hours and hours and hours upon them, in our forum. Thanks a lot.